Yep. So I'll start off. So my name is Jeremy Knotts. I've been in crypto since early 2017, but been well aware of it since 2011 when I first moved out to Raleigh, North Carolina. I had friends in the area that were always talking about Bitcoin and how they have been getting involved themselves, and they kept urging me to get into it. And at that time, these affiliate marketing groups had been running rampant. I was accustomed to, rug pulls and scams. So I used to think that Bitcoin was a scam back in 2011, 2012, just based off of the volatility and the lack of liquidity in the market. And I was like, man, this is just a hope and a dream that these people are waiting for. And then 2017 came around. I got in about mid-level of the monster bull run that we had that took Bitcoin from $1,000 all the way up to like $19,600. I decided to jump in at $2,000 after one of my friends, one of my fraternity brothers, had sent me two screenshots of before and after. One was a $10,000 screenshot of his portfolio. The next one was a $40,000 screenshot of his portfolio. And he urged me to get in ASAP. So when I started to see results and I started to see numbers, I said, all right, well, I'll give it a shot. And I went on to this little sketch exchange at the time called Coin Mama. And I bought my first Bitcoin at $2,000 off of a credit card. And so that was where I started my crypto run, but never really appreciated it. And I was like, oh man, this internet money, it looks like it's holding value. I don't even know how to cash out. I don't even know, when to take gains. Like it just keeps going up, 5,000, 10,000, 15,000. What is this madness? I literally saw Bitcoin go from 10,000 and 19,000 in like a 3 week span. It was super insane. And during that time, I started to take a look into some of these crypto projects. One of them was OMI, which was the original minter of the US dollar Tether token. It's the stablecoin, I believe it's like number 4 in market cap right now. It's the most widely used stablecoin that's out there. It has some controversy around it, whether these dollars are truly pegged to, these tokens are truly pegged to $1 inside of their um, reserves. But I got 100% gain off of it. Just, it was really wild to me that money just started printing, and I didn't understand what I was getting involved in. 2018 came around, major altcoin boom. I'm over here like, well, I'm about to quit my job. I made, $7,000 off of a $700 investment inside of Verge. A lot of people probably would remember back in 2017, right after Bitcoin topped out, John McAfee had tweeted about Verge being one of the top privacy coins out there. And that thing went, straight to the moon from less than a penny all the way up to 26 cents. And then that was when I was like, you know what? Let me take a pause and understand what I'm really investing in. Right now, to me, it just seems like a major money grab, but I don't know what I'm investing in. With my background as being a software engineer for the past 11 years, I started to dive into GitHub, reading source code, reading functions, pulling branches down, running, these nodes, these validators, running these blockchains. It was like, oh, this is actually legit code. Someone actually put some thought into this. This isn't just, some white paper rush. Now, back then when we had these ICOs and initial coin offerings is what an ICO was, where they say, here's our white paper. This is what we want to build. Fund us, we go build it. And then they would literally take your money, run with it. There was some that were legit, some that just, scammed you and took off with the money. And so that helped me like really start to dive into communities, understanding team dynamics, and really getting into the fundamental analysis of these projects so that I could become a wiser investor. Well, I didn't have enough time. I didn't realize that there was going to be, a critical point where it was time to take profits and run and come back 3 years later. But it happened. The rug got pulled, Bitcoin collapsed, altcoins collapsed, and we enter into what we call the crypto winter. And so, in that bear market, your mindset had to change. You had to go from just throwing money everywhere to learning how to take profits, learning actual technical analysis, understanding why these things had to, they made their changes, their turns. That leads us back to that Dogecoin conversation and how I was able to, make 1,000% on a short. It was because I saw the overextension of it. I saw the hype market, and I was like, you know what, this is going to end bad. I said, everybody's looking for this Saturday Night Live broadcast with Elon Musk, and I nicknamed it Saturday Night Liquidations. It's happening. The volatility is about to come. People are going to dump their bags. And so, those were some skill sets that I learned in the bear market that I was able to apply to today. And when it came down to this period of 2019, 2020, when we started to see a psychological shift in investors. They went from the FUD, JP Morgan calling Bitcoin a scam, saying this thing is going to go straight to zero, and get out while you can. Government regulations. I swear China banned Bitcoin every 2 weeks. It was almost like every pay period they was banning Bitcoin just to see fluctuations in the price. So that's when you started to get that thick skin, and that's where I kind of got that nickname Iron Hands from, because I was accumulating. I said, this is, all of this FUD is for a reason. And it was because the banks wanted to buy cheaper. And so when it came down to 2020, we started to see some major macroeconomic changes. And in that, if you look back at the history of the US dollar index, it was like, we're seeing the same signs as 2017. And so that let me know to go ahead, invest as much as I could in Bitcoin, and to also tell everybody that I could. People thought I was crazy. I was lunatic because I was telling people this thing crossed the 6,500, bet the house. And that was because we had just came off of a capitulation. We went down from, 8,000 all the way to 3,000 when COVID, shut down the economy. The rest of the markets collapsed with Bitcoin. And so, that was a buying opportunity. I thought I was crazy for throwing more money in there, throwing $2 and $3 grand at it. I'm like, well, that one Bitcoin is now worth, 58,000 as of today's price. And it was because you understood the cycles and how to get there. And so I really trained myself to be more steadfast in how I accumulated these projects. I really did my due diligence, and it's starting to pay off. I also learned, various trading strategies and different trading platforms that really helped me maximize gains. And then when, we took off in September after, a little altcoin, what I call a pre-pump, it was, the rest was history. We crossed 11,500. And then next thing you know, you start hearing about all of these huge investors that were getting in between 11,000 and 19,000, and all the way up to, I thought Elon had bought the top with Tesla. They, they broke down that what was supposed to be the top of the cycle, ran it up to 42K. And, all of this was just basic, trial by fire kind of experience. And, here we are today, being able to apply these strategies, teach other people, and, bring this knowledge forward to the community. My motto was always reach one, teach one. And that's what I live by. And now I'll throw it over to Caleb. I know I just went on a whole sermon right there, but go ahead and introduce yourself, bro.
I mean, it is Sunday, so somebody.
I can say this, like, honestly, before introducing Caleb, like, I want to say something. Caleb taught me a lot about trading. Like, I've learned from different mentors, but Caleb taught me on a brother-sister level. Like, they are not teaching us what this is. They are not showing us this. And he made sure he was adamant about, like, I saw basically his moral laws at that point, right? It wasn't just for the profit, it was for anything. It was like, sis, they're not teaching us this. Why not? And it made me really evaluate. It made me study a lot. Don't get it twisted. My head was hurting from all this studying that I had to do. But if we didn't learn it, if I didn't learn it, nobody else would teach me, right? So just really learning a lot from Caleb and Jeremy has been the greatest, like, journey of my life, because it allowed me to really understand on my time and from my perspective off of everything that I wanted to learn. So I just want to let you guys know that as long as you guys are have tenacity and stop following the crowd. Because one thing that Germ said that I need to like elaborate on is this is money. This is not what's the best movie is out right now. Do you like Mortal Kombat? This is about your money. So following the crowd on money to me is not really it's really naive. It's not really the most genius thing you can do, right? You could probably follow the crowd initially, but to follow the crowd and say, yeah, I'm gonna wait till Doji, I'm gonna wait till it hits $1 and not know charts and not know different indicators and not know these things that Caleb and Jeremy and I teach, that makes no sense. So just stop that and start like really training yourselves to get your knowledge first, and then with knowledge have the discernment to trade at this point. But the knowledge is the most important variable right now and right here. So wanted to give that brief introduction on Caleb, but he need, just you guys need to know, like, these guys have that moral law about it. Like, they're not going to teach us. We have to teach each other.
Thank you, Stephanie. And I think that's what the option sniper community is all about, because I drew so much from the community as a whole. So that's what this platform is for. Is what the option sniper community has built has been amazing. So it's just like all the resources, all the tools,
correct,
all the expertise. I mean, I honestly think it should be worth a lot more, than a general subscription. But it's just like it's an amazing amount of information. But it starts with this option sniper community. That's the centerpiece that we believe in. That's the centerpiece that we're focusing on. That's the foundation, of what we are actually doing. We're building this. It's a unified front, starting with this community that started with options, and now it's like, okay, let's also educate our community and build something even bigger. Yes, because there's a multi-market, and opportunity doesn't wait for any person, so it's like this community is taking the steps right now to help in this education cycle, so it's about the education, it's about, us starting in this community and then bridging those particular gaps, starting with the options like community. And like it's like a big family.
So, definitely. And I love how they're bringing in the opportunity for you guys to even speak. And I know for a lot of other people to come, like, option sniper community, as you guys show, the platform has been really taking the time to teach everyone, like kind of like you guys said, teach one, like to really teach everyone at their pace, at their journey, but giving the tools to do so. I mean, that's a rare type of community to begin with. And I know that they take pride in that, but this is really beautiful. It's like euphoric, if you will, to see a community, like even bringing other people that has like minds, and to see in a community teaching everyone who just wants to learn.
And just a little bit about myself. Thank you again, Stephanie, and thank you, Jeremy. Thank you, the community also. And just a little bit about myself. I and just my crypto journey. I'll just focus on crypto journey because that's what this is about. My actual introduction to crypto was around 2011, 2012. During that time period, I was just geeking out on just internet marketing, advertising, those type of things. And I just was reading a blog because I was just consuming a lot of information as I was learning about, what Bitcoin was, what I guess what was being built. And at that time, all over media or like internet media was like, it wasn't like major media, but it was just called internet. It was called nerd money, excuse me. So I was like, what is this nerd money? Like how I buy it. And then Mt. Gox was then around that time. There was a few other super shady platforms. And I actually did try to purchase. It was about, I was like, well, let me just put $100, into this, so I can just see what will happen. And just like anything, and that's why we do need some sort of organization and some sort of regulation, some rules. I ended up trying to purchase something and my computer got hacked by so many viruses. I don't know what I downloaded on my computer, but I was like that old lady trying to download Windows on her actual computer or something. It's like I had so many viruses, and that kind of turned me off because I couldn't figure it out. So I was like, okay, I can't figure this thing out. I'm not even going to worry about it. And I kept seeing it in the headlines and this is and that. And then, I saw again, and I kind of had a conversation with my father about this, that I tried to actually purchase it a while ago and I couldn't figure it out because my computer ended up getting hacked with viruses. So I don't know what plugin I had downloaded, but it wasn't the correct thing. So fast forward to 2015, 2016, 2017, in that area, 2015, I was like, okay, I need to do this. I need to do this. Procrastinating. 2016, I kept seeing the price. So I was like, all right, this thing was like dollars, when I first was trying to figure this thing out. Now it's $1,000. I was like, all right, I gotta get in this. So fast forward like 2016, 2017, I actually started doing my own like due diligence to really sit down and actually learn, the technology. And that's when when it hits you, you start understanding it, it hits you. But I mean, it's just like options or trading in general, being able to multiply your money. Like what the option sniper community hits you is teaches you is amazing. Is that same zeal and that same fire is like when it hits you, it hits you. And it hit me. So that cycle, just like Jeremy, I started investing, heavy. I was that bag holder. I literally had like 14, 15 different exchanges because that time period, a lot of them were new exchanges. And I didn't know what was fake. I didn't know what was real. I just knew, okay, let me average my money different places so I don't lose all my money. And granted, about 5 of those exchanges went down. I had no idea what I had in there. I joke with people, I'm probably rich and I just don't know really rich in crypto, but I can't get into half those exchanges. Some of the sites are down, so I kind of laugh it off. But those lessons taught us, what not to do too, also, so, and that's what this community is about. It's like teaching us what not to do. And fast forward to this 2020 cycle and what we're going to get into, like just kind of us moving forward past the intros, we're going to just get into like some of the past, like some of just the basic things. I think what's really important here is just like understanding like what's going on in these particular cycles. I mean, Jeremy already addressed Bitcoin. We know it's not just hype. We know there's a digital store of value in what the hedge funds, the banks, everybody who said this stuff was fake. We know in 2016, when JP Morgan Chase told the world, Jamie Dimon was just basically told everybody was fake. We know that weekend, because they had to file their public filing for the stock exchange, we know that they went and bought Bitcoin. They crashed the market and then they went to go buy cryptocurrency. That's like some evil villain type stuff. You crash the market, you tell the world it's fake. You're the largest bank in the US, you tell everybody it's fake, and then that same weekend you go and buy. And then you continue that dialogue to tell people that this is not real. Well, why are you spending $50 million on something that's not real? And you're the biggest bank in the world. So it's one of those things where we as individuals, we have to educate, and this is what this community is for. And we address altcoins already. So we'll kind of zoom past that and kind of get into the nitty gritty. And Jeremy, I'll let you start with this so we can kind of fast forward. The decentralized finance, Web 3.0, the ecosystems. Think of these as sectors. Before Jeremy continues, I mean, since I'm very multi-market, I can speak a couple of different languages of trading. So think of these as sectors. You have your biotech. You have your technology sector. For those who trade, for those who don't trade, this might seem like too much or over your head, but just we're going to simplify it. So Jeremy, I just want you to simplify this, and let's move forward, but let's simplify this for the person who's never seen this stuff before.
Yeah, so I'll take it from here. These different sectors, like I mentioned before, you can map those back to how should I say, traditional industry businesses. With decentralized finance, everybody goes to a bank, right? So at a bank, what do? You generate loans, you deposit money, and you gain interest off of the money that you deposit. But the problem is that these banks are really robbing you of potential gains. Like when the people decided that the banking institution was corrupt, that they were for profit and for themselves, they began developing these platforms called decentralized finance. And so with decentralized finance, you can place your crypto up as collateral. You can generate loans. You can borrow against your crypto, and you can also deposit them on these exchanges that are given, 25, 30% APRs and interest rates back to you just for, holding your crypto there. So you're not only just putting it into a savings account that's giving you 0.25% interest per year, you're literally getting like 100x that. Like, it's crazy. Once people really started to dive into some of the practices of the banks, it's really corrupt. As Caleb mentioned, JP Morgan Chase, even threatened to fire employees if they held crypto. That instilled panic so that they could, build their infrastructure up at the cheapest rate possible. Like, they didn't want to buy a 20K Bitcoin. They wanted to buy a $6,000 and $3,000 Bitcoin so that they could, get enough assets to be able to develop these platforms. Next thing I'll talk about is this new rave out here called NFTs, non-fungible tokens. So this has been around since, honestly, like ancient times. Antiques, collectibles like your cards. A lot of people, back in the day would trade rookie cards of like Michael Jordan and stuff like that. Well, now they have a decentralized version of that, a digital version, where you can come on and you can create NFTs and you can exchange them and trade them and auction them off. We got artists that are coming on board, such as The Weeknd even launched the NFT to, take advantage of this disruptive technology. It has been just, it's ballooned. You got people that are trading, $40,000 digital art. And back in the day, you would actually have to have the physical card, but now these cards are pretty much stored on the blockchain with ownership rights, public ledger that says it changed these amount of hands. And it has really evolutionized that space. And then we want to dive into what is a Web 3.0. This is pretty much the decentralized infrastructure. In order for these companies to really call themselves decentralized, everything needs to be decentralized. Their APIs, their databases, the places where they're registering their domain names and all of this other stuff, in order to really take take the power out of these centralized hands, such as your GoDaddies, your Googles, your Amazons, and place it back into the power of the people. A lot of these projects are allowing individual consumers to be a part of this network by allowing them to deploy nodes, allow them to deploy validators, and be able to approve transactions on the blockchain and give those users a kickback on the rewards for processing transactions, for allowing us to rent space on your computer to store a fragment of data, or like in Bitcoin, you hear about mining all the time. And essentially what it does, it allows you to process transactions or give a portion of your computer power to the network to help fund that. I mean, if you think about like solar energy, whenever you put solar panels on your house, you're contributing back to the energy grid, and the power company is paying you for the power that you provide on the grid. And so Web 3.0 and getting that infrastructure built is going to be really huge. And then we got ecosystems. So you hear about Ethereum all the time. You probably started to hear about Polkadot and Cardano. These type of projects are allowing developers to come on and build these decentralized applications and getting them to market very quickly. And so that's the reason why you just saw like Ethereum go from $90 at its low all the way up to close to $4,000 as of today, because you have more people that are utilizing it. This is adoption. This was that mass scale adoption of decentralized blockchains. And from here, as more and more people are becoming aware of these blockchains and ecosystems, more money is going to get injected. These huge companies like Grayscale Investments are injecting, millions and billions of dollars. MicroStrategy Investments probably holds about $1 billion worth of Bitcoin, and you didn't hear about them buying until, the early part of this run around 15,000. They just been stacking on every dip as it goes up and just putting it off of exchanges, because everyone knows that people are going to start transitioning over into this new, more secure, um, decentralized environment. Decentralization has just been huge, especially when it comes down to countries that are huge on censorship, such as China, such as some of these communist and dictatorships, such as Russia, Iran, and even them, they're getting on the blockchain and starting to put their digitizing their currencies through central bank digital currencies, CBDC. We're looking at a digital yuan that's going to sit here and launch in the next couple of months, and I have some feelings about that just based off of the environment that they're in. But it allows them to track where money goes and be able to monitor that stuff. And so previously a huge thing was the black market, the dark web, and people being able to launder money and not be able to track purchases well. Well, now that's changing. We're going to probably start seeing bans on privacy coins, because that's the point of blockchain is transparency, knowing where money is going, how money is flowing, who owns what. I can't just walk up to somebody and give them $50 and no one knows about it. If I give somebody $50 for the blockchain, it's on the public ledger, which is replicated on each node of the blockchain. So there's really no hiding if you can follow the money or whatnot. So wouldn't be surprised if we start seeing. Go ahead.
I was gonna say, like, because you said a lot of things that makes me want to just hound on the questions. But when you were talking about decentralized finances, non-fungible tokens, and then you were saying where it was going, you're not really comfortable with specifics that where it's at right now, what China, Russia doing, etc. What crypto sectors are hot right now to you?
So right now, to me, the ones that I mentioned, the one thing that happens with crypto, you start to see a little bit of musical chairs where you start to see money inject into sectors. Back in September, it was the DeFi craze. Then it was ecosystems such as your Polkadot's, Cardano starting to get legs under them, and then the NFTs where companies like Chili's went from less than a penny all the way up to like 94 cents before taking that correction down. So we're starting to see that these sectors, they're going to be around for a long time. They're getting a lot of money injected into them. They're going from $100 million market caps to $5 to $10 billion market caps. And more money is starting to, flow into them. You got some of these market caps bigger than Delta Airlines. Everybody flies Delta and pay those high price tickets to fly. And just imagine, getting involved with one of these blockchain companies that are, crushing the game and it basically doubling market caps of these well-known companies that are in this traditional world.
Yeah, and I'll add that too. And then also what Jeremy is saying in terms of like the functionality of these things. So imagine, just to give like some real world examples, I know a lot of this stuff just seems like technical jargon, but just to kind of simplify it and like dumb it down. Imagine being able to online to have a mortgage or have a car loan that you want to get, and the peer-to-peer network determines, that particular loan or that, and there's not a centralized bank that says deny based on race, creed, credit report, whatever it may be. The actual network is the one who's accepting, those transactions and those deals and is doing it in a fair and a just way. So that's where we are. And that's why you will look at an APR in a bank, or a money market in a bank, and I can simplify it again. If you have a savings and checking, in your savings account, you have like money markets, and the bank say, do you want to put in a money market? We'll give you a 1% to 2%. And you think to yourself, okay, cool. I want to put my money here and get my 1% to 3%. If you do that in decentralized financing platforms, It's not 1 or 2%. It is 5, 10, 600, 700%, 800%, 1,000% APR, guys. Like, this is unreal. And it's something that is able to do because of the liquidity, because of the derivatives that are traded in this platform, and because this is a world market. You know, we know the U.S. market represents 50% of just the international market. You know, and then we have Canada with about 2%, which launched the first ETFs. You know, but that's about 2%. So imagine with U.S. adoption, then you have mass adoption. You know, then China, you know, China's market is obviously right next to ours. But you have, like, in these economies, if you think about that, another example, you have GoDaddy and you have Namecheap. We all know these names. We've seen the race cars, we've seen the advertisements. But imagine you being able to buy your domains, and it's a decentralized domain server that somebody can't just like take your domain and just shut it down, you know, or a system or the bank or the government can't just come in there in decentralized finance and freeze your account. That's
No,
what's
that
scary.
makes sense. I mean, basically, to simplify it much further, it's just pretty much like loan directly with no corporation or telling anybody who's receiving the loan what to do with their own money, like what's going on right now, or do they even qualify for their own money?
Right.
And not really any third world party, just less human, human interaction, human engagement, and just really peer to peer, like approved as soon as they see your coins, your axes, like what you have in your portfolio, right from the peer to your device in itself. Boom, loan approved. That is exactly where. I mean, just to simplify it, like it's a loan directly with no corporation, no bank
Exactly.
telling anybody what to do with their money,
It
telling
is.
nobody about any, discrimination. Nothing really gets in the way between the loan and the person who wants it.
And that's what's scary in economies where there's more control than necessary. So that's why they're going to tell you something is fake and then invest that weekend $50 million in that thing when they crash it, because they're trying to get their positions long term. You know, so, and that's why, you know, the largest banks all of a sudden with the biggest CEOs and the richest people switched up so quickly. Okay, and another example, imagine if you have a decentralized banking system like we have today in the blockchain, why would the biggest centralized banks in the world or in the country invest in a system that removes it from existence? Now, just let that ponder. So instead, they try to say it was fake. Now they're throwing billions of dollars into decentralized systems that remove them. That should cause, you know, the average American to be like, hold on, like this little 2%, y'all say I was gonna get, like, I can put it here, and hold on, y'all are investing in these companies too that are going to remove y'all from existence. So it's just like anything, we've seen big brands just like disappear. So now they're running to actually invest too. And now we have, like, you have your institutional investors. We have the MicroStrategies of the world, or Grayscale Bitcoin Trusts of the world, which are preparing these ETFs. And the average American doesn't understand, whether you know it or not, your retirement, your Roth, your 401k, you actually are already invested in the blockchain or Bitcoin without you realizing it or not. Because those banks are the ones who run and manage your retirement.
Yeah, and pretty much nobody's gonna really get their retirement by the time we're at the age. We're gonna run out of it.
Yeah, exactly. So that's something to also consider in this, whether you understand or not. It's happening with us or without us. The Wall Street, the technology banking system have moved to blockchain technologies. The same stuff that they're telling people is fake, they've moved their system to build on those type of things. You know, so it's just one of those things where you have to just sit down, and sometimes you just have to simplify it, or like just dumb it down a bit. You know, whether it is in a virtual world, if you watch virtual reality, anybody who plays video games, in a video game you buy skins, NFTs. Just think of NFT as skins in video games. You know, so it's like it's something that you can exchange that nobody can corrupt, and you can just buy it like that in a virtual society or a virtual world, you know, like this virtual real estate also. And that these are all big things today, you know, so it's like some of this stuff, it seems so far fetched, but sometimes you just have to dumb it down and simplify it and just also just follow the money with some of these things.
Yeah. Something that is really amazing, I don't know, just to keep on the topic, and where it's going. So where's money going right now, right? I mean, is it true that the US dollar is about to be, average in less than 30% of its value right now? And isn't it ironic that money went from coins to dollars, now going back to coins, but digital coins? I mean, there's so many different trends of this happening and continue to happen. But we got to stop thinking traditional. We got to stop. I mean, you go to a bank right now, let's say you have $300,000 in your account, and you want to go take that money out. It's not going to happen overnight. You can't even get it. Actually, even if you try to take out over 10,000 of it, you're automatically going to get flagged, right?
Right.
So, like, how does the public stop thinking traditional like that, traditionally like that? And how can you instill, like, teaching them how, this whole platform teaching them how to trade in an evolutionary way, where that disruptive digital technology, like you guys were talking about with decentralized finances. But what would be some strategies that people can start with right now, who has questions
So
about it? Where can they start?
uh, I'll take this one. I'll start it off. So what really hit me was seeing the actual value of the US dollar on a chart. So if you go to tradingview.com right now, you type in DXY and pull up the US dollar index. That lets you know the strength of the US dollar. And so a lot of people in here probably trade Forex, as well as other stocks, but you can also see that we have declined against other currencies from other governments. And so typically what triggers this kind of thing is mass inflation. And that's the reason why you hear about the feds talking about let's cut interest rates and things of that sort, because they're trying to control the influx of new US dollars into the system. And the thing is that the more dollars that come into the system, the less your money is worth. I remember back in 1995, ride my bike up to the store and I could get a wealth of candy for less than $2. And now I can't even get the same amount of candy, for under $10. That same big bag of candy is now 5x, more than what I used to pay back in 95. And so if you really look at how investors have really tried to protect themselves against inflation as the government prints off these stimulus checks and, 2 rounds of it. And you can really see investors flee to other hard assets, which means that they're liquidating their dollars and they're putting it into other assets, one being gold, one being silver. And the biggest one of them all is the digital gold, which is Bitcoin. And so in order to if you look at your 401k, as we've been discussing, it has been losing tremendous value over time because your dollar is not as powerful anymore as it once was. If you look at, even the price of avocados has gone up compared to the US dollar. If you look at salaries, they have gone up. I remember when $100,000, you were basically rich if you were making that every year. Now we're seeing salaries of 200, 300,000. People are like, oh my God, I'm making all of this money. And it's just really an adjustment for inflation, cost of living. These raises you're getting every year, you're not getting a true, extra $2,000 in your pocket. They're just accounting for the cost of living increases because prices of goods are increasing, prices of maintaining highways are increasing. And so they have to be able to, your companies have to really balance that out. And so that was one reason why I was really huge into blockchain technologies, because I view Bitcoin as a store of value. Yes, it's a volatile store of value, way more than gold, but look what gold has done the past 30 years. Ask Peter Schiff how that's working out for him, where you got Bitcoin that has been the best performing asset. Yes, it went from 50 cent up to, $64,000 at its current peak. And I do see that it's going to go to 150, 200, and eventually $1 million per coin as the United States continues to pump, all of this quote unquote debt relief and, being able to, just print money off to fund these programs to help people, just stay afloat during the pandemic. Like, people are not realizing the cost of that. Like, now everybody has a $1,200 stimulus check. $1,000 doesn't mean as much as it did, this time last year. because it's just so much more money flowing into it. And so, there's different strategies that we'll get into at another time. But right now you have to really start looking at your portfolio. You have to start thinking about the different options that you're going to have. Option Sniper is going to, we as a team going to provide that kind of value to help you get ahead of that and to help you maximize your wealth and be able to, hold on to the strength of your wealth and not just sit passively by while your dollar loses value, that 401k loses value. I remember I got mad at my 401k because it lost 10%. I was like, are you serious? Like, they say this is supposed to grow over time, but then if you really look at the macroeconomics of things, multiple countries are dumping the US dollar and they're running to blockchain. I mean, we're at the point in the next 5 to 10 years, we could be like Venezuela, where the US dollar is literally toilet paper. It's confetti in the street. People were just throwing millions of dollars in paper notes in the street because it lost its value because the government kept injecting so much money to sustain itself, to the point where they were like, all right, fine, we're going to convert over to, blockchain, and we're going to go ahead and try to get a control over this.
Yeah,
so that's my low rant.
Another thing I want to add about that, in terms of what Jeremy was saying, is just understanding about the money and micro and macroeconomics. And this is about education. This is what the Option Sniper community provides. And this is the whole community is built for. This is protecting, our wealth, educating ourselves, into this next generation of innovation and technology. And just not just about trading, it's bigger than that, So it's with this. One thing that Jeremy didn't mention, that I do want to mention, is last year, the US actually printed, if you go on the M1 money supply and just the history of money printing, last year we printed about 20-something% of all money ever printed was printed last year. And that should just drive anybody insane. And we know that gold came off, the dollar came off the gold, the gold reserve in the 70s. So once that happened, our US dollar didn't really have any real value. Our value is based on guns. And let's just be real. US protects itself. It protects its dollar with guns and war. So it's just like, because we have the biggest guns and we have, the biggest drones and the biggest, that actually is the only thing keeping our dollar up. If you really look at, the economics of everything, we saw what happened in some of these oil crises, some that happened in the 70s and the 80s. A lot of these crises happened, and you saw the price of oil fluctuate like that. Is immediately what we did was go and protect it with war and with guns. So the US standard for exchange is still not US, but international standard is still the US dollar. So something now is going to lose in 2 to 3 years, 40%, everybody, I'm not even exaggerating, 40% of its value on an international standard. So if you have $10,000 in the bank right now, and you are a hardworking American, and you've been doing all the right things, your money is going to be negative 40% on the international standard. That isn't okay. So and if you don't understand inflationary policies on inflation, just forget all this, stuff that just seems over the top for a lot of us. Just know that with the cause and effect, with money printing, you need to have something to protect against the hedge. And that hedge is and look at what big boys are doing now. They are hedging it with cryptocurrency and with Bitcoin, and banks are investing in technology that removes them out of existence, which is wild if you really think about it. So it's like one of those things where you have to sometimes you just kind of just dumb it down. Just know I've been doing the right things, and my money and the value of what I'm doing is going to be negative, and they're just going to keep printing money. And now if you look at how Bitcoin has performed against the US dollar, which is a fact, is every single year Bitcoin has been in existence, it's performed at least 200% better than the US dollar. So no matter what anybody was telling you to scare you, that this is not, if you just held it, it performed 200% every single year better than the US dollar. And that's not an opinion, that's just performance data. So it's like when you look at the actual facts and data and micro and macroeconomics and international economies, you start seeing a correlation. And that's one thing that we realize. And that's why we're like, we have to protect And Option Snipers was like, okay, we have to protect our community, and we had to come and now start providing consistent education for our community to know that, okay, guys, this is what's even when we're trading, that's great, but all that cash you're accumulating, knowing that I'm trading and I'm learning and I'm in the stock market or whatever I'm trading, and then at the end of that, the value of my US dollar is going to be negative. That doesn't make me feel good, because you're doing the right things, So just getting into some of the returns that are seen in this market, the returns are quite unusual. The returns do seem kind of unreal, because in the traditional stock market, you get in 100%, 200% a year, you're an amazing trader. In crypto, you getting 200% for the day, you don't feel good at all. You didn't trade well that day. So that tells you about liquidity. That tells you about opportunity. That tells you that everybody's on this call, you're not too late. You hear people, oh, am I too late?
Question. Mm-hmm. No, so that makes me like, because I'm looking at these comments and somebody just asked like, oh, should they change their money? Blah, blah, blah. Just really go instead of it's just like monetary policies, right? So how did the stimulus check, for example, jumpstart the epic bull run that we're in right now? And how in the world, like, what's going on with these monetary policies, like even based off of what you said, how the US dollar is negative 40%, like what does that mean for the consumer? What does that mean for the retail investor?
Jeremy, you want me to take that? Okay.
Well, yeah, you got it.
Okay. So what that means is you now need a positive hedge on your money. So now every person in this country is affected by this. So it's not something that you can casually go about your way and say, oh, it's not a big deal. No, you're going to be affected. So when we saw the bubble in 08, 09. We saw what happened with the credit default swaps and what was going on in the mortgage industry and all that. Guys, that stuff didn't go away. They just hit it better. So before COVID happened, another market was about to crash, and that was commercial, and that was like the commercial side of things, not multifamily, but like commercial buildings. That market was overextended, and then also higher end multifamily was also overextended. So you had two markets that were on the brink of collapse again, so what you're seeing here is they're building these systems and they're very flawed. So now with crypto, you have decentralized systems that remove those flaws in these systems. And you can now hedge, let's say you have $900 in the bank. Okay, I need credit, I need cash, and I want to be able to get a loan or a credit card from this particular bank because I've built amazing history here. Guys, you can have that same loan, same cash in a crypto exchange and actually get better rates, whether it's for a car, it's for a house, it's amazing what is being built in this economy right now. And then while you're doing that, even while you're holding those assets in there, you can actually borrow from your tokens and never sell your tokens. You can never sell any of your cryptocurrencies and just borrow from the value of them for as long as you want, and you don't actually have to sell. So you're accumulating something and then the value of it is going up, and you can actually park it and get a percentage off of APR and then be able to actually get a loan from it. What, can you do that with US dollars? No. It's like, that's not even possible with US dollars, but you're able to actually do these strategies with crypto that it's impossible in holding any traditional, not just US dollars, any traditional international currency. So so it's gonna affect us drastically, just like Jeremy said, when we go to the store, it's gonna affect you. When you go out, when you go pay your insurance, it's gonna affect you. Now your money's gonna be less, but the value of what you think now, everybody sees the value of their houses, they're going up. No, they're not. Negative 40 from the cost of your house. Your house is not going up. It looks like it's going up. We soon forget 08, 09. Stuff looked like, do y'all remember the news the week before the crash? We were at the highest peak of everything then. Next week, you saw a crash. So stuff looks like, oh, you hear people bragging, oh, my house has now gained $200,000-$300,000 of value. No, it didn't. Your house is negative 40%. And then if they keep printing money, and we have this plan that Biden's about to do, it's not, oh, this is not a political thing, but any president is going to push money to an economy right now. But what's happening is the average American doesn't have the proper hedge. So that is what one thing you can use cryptocurrency from. And again, you can do a lot from that hedge. You can loan from it. You get a high interest APR, 10, 20, 30, 40, 50, couple 100%. Some of them are even 1,000, 2,000% APR, guys. Like, it sounds crazy, but it's actually real. You know, so it's like you can do a lot of strategies with that actual money. So that kind of answers your question. And then in terms of platforms, we've kind of, Jeremy, I'll let you handle this. We've kind of focused a little bit on a lot of the decentralized, but we can go, I guess, in like short detail about wallets, centralized exchanges, and decentralized exchange. Just and then keep in mind time also. And I appreciate everybody who's here too for giving us time to speak.
Yeah, so I'll give a quick overview of what these topics are: a centralized exchange, decentralized exchange, and how to keep your crypto safe through wallets. So centralized exchange is an entity where they control the listing of projects, delisting of projects. They control the monetary flow of deposits, withdrawals, and the trading platforms. Think about, your Robin Hoods, your Weebles, and those are the kind of platforms out there in the traditional market. Inside of the crypto space, we have Coinbase, we have Binance, we have KuCoin. These are some of the top most reputable exchanges. Binance is one of those that is a little shaky to get into now that US has, installed some specific regulations on to what cryptos American investors can really invest in and trade. But there are different ways to invest in those cryptos, and those are some things that we'll talk about on down the road at a future time. But decentralized exchange is an exchange that is pretty much manned by the people. You can go up there, you can list the token, you can delist your token, you have to provide liquidity for your token. So a lot of these companies have taken advantage of, these type of exchanges like Uniswap, PancakeSwap, Bakery Swap. Yes, every kind of food swap that's out there. But these were decentralized exchanges created by various developers where they wanted to remove the censorship of exchanges and list some powerful tokens up there that eventually did get listed on these exchanges and have really performed really well. Hold on, let me finish. The wallets
so hyped
are.
Now. I think everybody is. They ask me a question.
I know the wallets are ways that you can store your crypto. Natively, every exchange has a crypto wallet. So anytime you buy or sell crypto, they generate you a wallet on the fly and store your Bitcoin, Ethereum, whatever altcoin you're invested in. And then you also have these external wallets. We call them cold storage. So back in the day, people heard about Mt. Gox getting hacked and people losing all of their Bitcoins that they had on those exchanges. And so we have this phrase in crypto called not your keys, not your cheese. And that means that you need to be in control of your private keys, because if an exchange, somehow gets shut down by the feds or, gets liquidated, or, the founder gets arrested and everything's turned over, you still have access to your cryptocurrency, and you're able to move your cryptocurrency as you want to through various exchanges. I have personally a Trezor wallet. There are people out there that have like Ledger. There's also like software wallets where you can install an app on your phone or install an app on your laptop. And those kind of platforms are called Exodus, Trust Wallet, those kind of things that support a lot of these like Ethereum-based tokens. But some of these companies have gone the extra mile and created wallets specifically for their coin. And inside of those wallets, you can stake some of your cryptocurrency, such as VeChain, which is the supply chain type of company that monitors things throughout the entire blockchain from supplier all the way to consumer. And they allow you to stake your tokens on their site allow them to on their wallet and allow you to generate what we would consider, gas in the crypto world, but it's essentially a dividend that they kick back to you in form of their gas token that you can literally go on an exchange and trade it and actually get monetary value. And those are things that we'll, talk about at a future time, but those are just some high level thoughts on centralized exchanges, decentralized exchanges, and wallets.
Okay, so question about current crypto cycle. Like, where do you feel like it's the current crypto cycle right now?
I think we're in that accumulation, that reaccumulation phase. We already had the huge hype run up where we went, from the consolidation phase of, between 6,000 and 10,000, and we blew past all-time high by at least 300%. And now we're just in that phase of people taking profit, some people finally making their first crypto purchases and getting in. And the sideways chop is allowing other projects to flourish because all eyes are no longer on Bitcoin. Now your attention is on the Ethereums, the Cardanos of the world. Got a text message, Cardano just reached $1.81. I remember when I first invested in that coin at 2 cents. Never thought that it would be near $2, within 5 years. But these altcoin cycles is where a lot of the money is made, and these are where a lot of projects get a lot of visibility and notoriety. And this is where you'll find your next Amazon, you'll find your next Apple, you'll find your next Google in these type of cycles. And keep an eye on the ones that are really thriving and building consistently, and they're just not hype. That was the one thing that really irks my soul about Dogecoin investors, is that it's just all hype. There's really nothing there. People can say payment process and accepting payments here, but they don't really have a product. It was literally a dead project that was created as a joke. And so it's a slap in the face to these platforms like Ethereum that are building decentralized applications, Aave, which are decentralized finance applications and things of that sort. So I love money, but I hate Dogecoin. I'll trade Dogecoin. I won't hold it, and that's just because I love money.
So okay, that's a good point right there. Hold up, just for y'all, this is a good point that you just said that, right? So the way you said, hey, Dogecoin, you'll make the money. So that's pretty much like a throwaway play, right? So it's obviously distinctive. What are the differences, like as far as like big cap pumps, mid cap, small, and those throwaways, like you said, Doji?
Yeah, so your big caps are the ones that are, the big market caps. Typically, we look at big cap as being over $10 billion and higher. We're going to have to, readjust that now that crypto is at like a $2.3 trillion market cap as a whole. And those are your big, well-known applications like your Ethereum, your Litecoins, your Binance coin that are really being disruptive inside of the blockchain atmosphere. And then you have your mid caps. Your mid caps is generally anything between that $2 and $10 billion. These companies got some legs under them. I would say that they're in that hyperbolic startup phase or whatnot that are really making strides in their respective areas and their niches. Then you got your small cap. I would probably range your small caps anywhere between 200 million and up to, that $1.52 billion market cap. And those are the ones that have just, either been on the scene for a while and, have been, relatively undiscovered, but have been, pretty steady in their building efforts and, starting to make their marketing gains and things of that sort. Then you got your micro caps, which are, your punt plays, those that are under $100 million. I know Caleb can attest to this. This is where you make a lot of your money because you discover these products and projects that are like worth $20 million. And then next thing you know, 3-4 months later, they become your $2 billion, $3 billion market cap. I mean, let's take Aave, for example. They used to be called like ETHLand back in 2018, and their chart was trash, token economics was trash, their vision was trash. Then they said, wait, we got to change our viewpoint, and they really got heavy into decentralized finance, and did a rebrand, and changing the sentiment with their community. And we literally saw Aave go from 1 cent all the way up to 84 cents. They did a stock split. Their stock split ended up running from $25 all the way up to close to $600. So that just lets you know that feel free to get some of these micro caps. I wouldn't bet the house on them. These things will go to zero if something bad like a hack or something like that happens. But it's safe to have at least 1% of your crypto portfolio allocated to them. Caleb and I were famous for just throwing $100 plays at different things that we saw that had futures, and ended up becoming the $7,000 play, and higher depending on how much you put in there and how much it ran. So just some nuggets right there to not count a project out because their market cap is low. And I encourage people to research and find those type of gems. But those are things that at Option Snipers that we help with, is identifying those gems and trying to get ahead of those curves.
Yeah, yeah. This is Caleb. I would say just in the Option Sniper community. So anybody who hasn't joined Option Snipers on this call, just make sure you actually sign up and join Option Sniper. I know this is an open call because you won't be able to see some of the nuggets that are just in the chat. Just the crypto chat. I know anybody who has tracked just what I shared from a week ago, if you looked at that little list, I mean, you were up just on holding something. So imagine holding a stock and it went up 200% just in a week, and that was just regular for that particular market. So though a lot of those were your mid caps and some of your micro caps. So just like Jeremy was saying, it's literally not too late. And this is not you needing $3,000 per trade or $5,000 per trade. No, it's like that average person that has $20 can get started. And I think that's the amazing thing about crypto. It's like you don't even need $20. You $5, and all of a sudden you see your $5 in a 1 year cycle, go to $100. That's going to cause you to be. I know a lot of people that actually happened to them last year. They're like, yeah, I just put $5 just thinking, all right, it crashed. Let me just put something on it. And now it's like $100 and something dollars. I was like, yeah, that should spark something, because that lets you know it's actually possible. So in those micro caps, you're going to see a rotation. And that's what another thing that I know, Stephanie, that you were getting at. You are going to see a rotation in this market, and a lot of these different coins and a lot of these different projects. You're like, whoa, like, what are these projects? What are these things? And these things, like something like Polkadot here, it's building the foundation of like innovative technology. So to dumb it down and to simplify it down, how we all have, well, not all of us, some people are team Android, but a lot of people have, iPhones. And you think of the iOS or the Apple Store, and it has the tools, the iOS, that you can build those tools, you can do all these things and this and that. Well, imagine like something that's like decentralized. A lot of people get kicked out of, the Apple Store, can't even get in the Apple Store. Well, imagine something that's decentralized with a lot better technology, a lot better products, a lot better opportunity. Well, you have your Polkadots of the world, and it's allowing people to build their dreams and technologies in their own cryptos or their own decentralized finance or their own lending protocols or their own whatever, or their own NFT platform, or their own decentralized mortgage company. Like, you can build whatever you want on this particular platform, so it's just, imagine that's where we are. So we are very early in terms of the cycle of opportunity, so the opportunity, some people are like, oh, am I too late? No, you just have to do your due diligence and invest in the right things and not overplay. Anybody who invests in the stock market, and especially the Option Sniper community, teaches us, to dollar cost average, to not put all your eggs in one basket. I think to not have your YOLO plays be 90% of your portfolio, because I know some people who are very degenerate when it comes to trading stocks and like they have done like 95, 99% of their whole cash balance. They put it on red, basically. Like you're in Vegas. You don't do that in this community. Don't do that in this community. Maybe another community would teach you that. Don't do that in this community. We teach you better principles. So if you're going to invest, it's okay to have a little dough. I know Jeremy is not the biggest fan of Dogecoin, but myself, when I think of these things, I think of adoption. I think of if there is some sort of utility in the kind of some of the core principles of Bitcoin. It's like if something can be used as payment, who cares what the government says about it? It's now is payment. If the government wants to classify for it or not, it doesn't matter. Your Visas of the world, your MasterCard of the world have now all adopted it and said we're going to take this as payment. So that person who put $100 in Doge when it was 0.001 now has 20-something $1,000, and that is real money to them because it can be transferred into fiat. So but it's just one of those things where you hear about it, but it creates this kind of bubble cycle, and then that person who's not a very savvy investor, which is what OpsLab community is for, to make us savvier investors, puts everything on it. Don't do that in these cycles. Have your portfolio structured in a way where, okay, you have $500, put $50 here. If you're not really sure about this pump one, maybe put $20 there. I mean, that $20 might grow dramatically, because it may be a pump, but you didn't risk your whole portfolio. So in this cycle, you want to be careful, as you trade, because now I'll let Jeremy kind of segue into this Bitcoin altcoin cycle, because we are in these cycles right now. So this is something that we have to pay attention to right now.
Yeah, so with how they go is that typically when Bitcoin is making a monster move, whether it's up or down, all eyes are on Bitcoin, and people want to treat that as the store of value, right? When market conditions are uncertain, you run back to the thing that is certain, whether it's going up or it's going down. And so typically when Bitcoin is going through these parabolic advances and things of that sort, people will go into Bitcoin. Your altcoins will lose a Bitcoin value because everybody rushes back to Bitcoin, but the US dollar value will change because Bitcoin is pretty much the harborer of the US dollar value or whatnot. As Bitcoin rises and altcoins don't, it's Bitcoin season. That's pretty straightforward. We saw that from September all the way up through February, where you saw Bitcoin rising and a bunch of altcoins just, crashing against their Bitcoin comparative, but the US dollar value stayed consistent. And then we transitioned over into, that correction period in Bitcoin where people were starting to take more risk. They see that Bitcoin is more stable, less volatile. It's not making those $5, $10, $15,000 jumps like it was in that parabolic advance. So people are like, safe to jump into, these altcoins. You saw Cardano go from 30 cents to $1.81. You saw Ethereum go from 279 to close to 4,000. And then now we're starting to get into that cycle where Bitcoin and altcoins are going to rise together, where you're going to see Bitcoin go up along with these altcoins. And that just, lets you know how much liquidity is getting pumped into these markets.
Yeah, and Stephanie, I'll let you take the reins on the next question here.
Okay, so actually, hold on one second. This is gonna literally be like my last question for the people. They've been asking so many. I wish I could get to all of them, but this is what the last question. A lot of people are asking, like, where do they store their crypto, right? This is the one that I keep seeing a common question. Which corporation would allow them to have like the less fees? Which ones do they just sit on their wallet? Like to me, Coinbase is something that you just sit there and acquire. You don't really try to trade on Coinbase, but a lot of people are asking, where can they trade? What's the less interest fee? What's the less fee period? And what's the safest where they're not, getting hacked here and there by different viruses?
I will say that's what Option Snipers is for. We're going to get into more detail. So that's a question that will be answered as we go over more education in the Option Sniper community. So I don't want to phase it out or anything, but that is a question where we're going to get very detailed in the option sniper community, and you're going to see those things. But there are, on a higher level, to answer that question, there are a lot of platforms for you to protect your assets and protect everything that you're doing. So we're going to go into all those like advanced strategies, as we do like more trading, more calls, more, those type of things. But you will see, that this is something that can't be ignored and is here, and as a lot of people can see, because you have friends, family who in this euphoria cycle, people don't know what they're doing, but they make money. And that's dangerous if you don't know the cycle and what's actually going on in this particular cycle. So you have that flow money that just flows in, like Jeremy was saying. And then in this cycle we see now in phase two, we saw right now we're in phase two, Ethereum is outperforming Bitcoin, and we hear talks of it flipping. So if you understand your cycles, then you actually know where to invest and where to put your money. So now money starts trickling into those other larger caps. So we're seeing these phases. And then that's when like, okay, like they were saying, I can go on CoinMarketCap or CoinGecko and look at the coins and see, all right, if it's 10 billion up, it's a larger cap. So now I can see, okay, now I need to rotate here and these, like DOT, Link, whatever it is. I guess Tron is up there too. A lot of people aren't fans of Tron, but Tron is an old school project. But it's like you actually have direction and guidance now when you're in this option sniper community. So you're not going out there and losing your money. The point is for everybody to protect their assets and to know where to put your money, and to know where not to put your money, what not to try. Some people are, well, I'm going to try all this advanced trading. Well, like, that's fine. It's okay to test, but or I'm going to go and buy a course and do that. That's fine. But just know in that process, there's a lot of losses in that process. So option sniper community is to protect you from those losses. That's the whole point of this community is like, all right, skip all of that. We're going to go detail by detail, line by line, precept by precept, and go into a lot of details later on as we do more training. So there's a lot to actually look forward to, in the option sniper community. And I'll let Jeremy.
No, definitely, because that's what I just want to say, that like that's what's important in this community. Imagine if just everybody won the lotto right now, right? Look at what's going on when people do win the lotto and they lose it within a year because they don't really know what to do with their money. It's kind of what's going on right now in the crypto market. Everybody's winning, getting their gains, don't know what to do with it later. Now they have like $1 million worth of unrealized gains. They were just like a millionaire on paper. There's a lot of that sadly going on right now. So thank you guys so much for answering all of these questions. I want to bring it back to option snipers, but this is why this platform is so important, option snipers, because they're going to help you guys as your portfolio grows. They're going to continue to help you guys within the community with knowledge, with different strategies, and these type of phone calls like this where you guys can ask questions to be answered. I commend this platform. So thank you so much, Option Sniper, for allowing all of us to answer the people's questions and just to really, be informative. I don't know where they're at. I'm looking.
All right, Caleb and Jeremy and Stephanie, I really appreciate you guys tonight. Hopefully, I see a lot of questions in the chat as well. But what we're going to do is you can direct those questions over to admin@optionsnipers.com, or if you're already in the Discord, you can drop your questions in on our crypto side of it. But like Stephanie and the guys said, we're going to be doing this more often. We got some things coming, so we really appreciate you guys tonight, and thanks for coming up. If you guys want to see the replay as well, I think Wasa is going to drop it either on YouTube or throughout our Discord and go from there.
Thank you, everybody. Thank you for your time, man. Everybody have a great night and a happy Mother's Day to everybody. See y'all in the chat. Anybody who hasn't signed up for Option Sniper who's on the call, sign up.